More AI news here. Scott Galloway warns of a potential open AI collapse, triggering an ugly market shock. Quote, there's going to be nowhere to hide, end quote. Scott Galloway, a best-selling author and NYU professor, has issued a dire warning about the potential collapse of OpenAI, suggesting that it could have far-reaching implications for the global market. Speaking on his Prof G Markets podcast, I'll go ahead and throw the link to the story in here for anyone that wants to take a look at the podcast or any of the clips. That link is in the chat there for you. Galloway highlighted the precarious nature of the current market, which relies heavily on AI. He noted that since ChatGPT's debut in late 2022, AI-related stocks have accounted for about 80% of the market's total gains. Co-host Ed Elson highlighted red flags and cautioned that while OpenAI is bringing in roughly $13 billion in annual recurring revenue, it's spending more than twice that figure. Galloway predicted that OpenAI will likely file for an IPO sometime in 2026, and then Altman wouldn't be able to say sell your shares in an earnings call, as the OpenAI CEO currently said to an investor, Brad Gerstner, who questioned his $1.4 trillion spending plan. Scott Galloway further stated that the potential talks of a taxpayer bailout has evidenced that the firm lacks a sustainable financing strategy and may be forced to turn to debt, a move he believes could mark the beginning of the end for the AI bubble. Anyone else think that? Galloway warned that if the OpenAI narrative falls apart, the ensuing market downturn could be exceptionally severe. Quote, it's going to be ugly. There's going to be nowhere to hide, end quote. Recently, OpenAI's CFO Sarah Fryer's remark ignited confusion about the company's funding strategy, leading to speculation that the company was seeking a federal bailout. However, CEO Sam Altman quickly quashed these rumors, stating that OpenAI does not seek or want any kind of government guarantee to protect it from failure. Altman has also defended the company's $1.4 trillion investment in infrastructure, stating that OpenAI is bringing in far more revenue than the widely cited $13 billion annual estimate. The company also reportedly plans to launch tailored AI products for governments and businesses, new shopping tools, oh, that's what we need, and revenue streams from its Sora video service and AI agents. I tell you what, I can't go through my Twitter feed without seeing some child feeding a bear or a panther, and it always ends up being one of these stupid Sora videos. It's also exploring new debt financing to expand infrastructure and possibly supply computing power through its Stargate data center project. Now, as you would expect, analysts are divided over the AI bubble. CNBC's Jim Cramer has warned that the company's massive spending spree could test even the strongest bulls in the AI trade, indicating potential cracks in the company's aggressive push to dominate the AI landscape. However, after a $1 trillion wipeout in the Magnificent Seven market value, half of it from NVIDIA, concerns of an AI bubble are mounting. However, Goldman Sachs analyst argues it's too early to compare the surge in the dot-com crash, saying today's market looks more like the early stages of the 1990s tech boom rather than its peak. So we'll see who's right, who has more time, and what happens next.